The stock market got hit today. The S&P 500 closed at the lows of the session, down 1.27% on the day, largely on the back of the belief that we're going to end up with either 3 or 4 interest rate hikes on the year. Of course, the stock market grows a little nervous when they hear talks like that because they worry that rising interest rates could start limiting profit growth potential into the future. Now, in addition to the United States, we also had world markets struggling today. I do want to focus on one particular area of the world that got hurt a lot worse than the U.S. in today's session and focus on our trade application example on that area of the world. So let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's February 27th, 2018. Great to have every one of you on board here, whether this is your first time watching or whether you're a longtime viewer of David and I's videos. One thing we'd remind you to do is to sign up for our YouTube channel if you haven't done so already. Just click that red subscribe button there. You're also welcome to leave comments for us and give us a thumbs up if you appreciate these videos on a daily basis. In addition to that, we have a description area that does include some links that you can subscribe to our daily email distribution list that will allow you to see the different cluster signals that are out there in the S&P 500. Now, in addition to YouTube, we're also heavy users of Twitter. In fact, for those of you that were on Twitter over the weekend, you've probably seen me tweeting a lot of different things about Berkshire Hathaway since Warren Buffett did release his 2017 shareholders letter over the weekend, so I was able to get in there and dig through some of the details. But of course, we always put these Market Outlook videos on Twitter as well. So if you appreciate these videos, we would encourage you to click like and retweet. My own personal goal with that, if we're getting more than 100 likes on these on Twitter, then I feel like it's worthwhile to do these videos on a regular basis. If we're getting less than that, then that gets to be a little bit disappointing. So I do want to thank you. A lot of you guys stepped up to the plate. Since I did the video last Thursday, we got up and over 100 again, and I saw David was at right around 100 with Monday's video, last night's video. So thank you to all of you that do that on a regular basis. That really does mean a lot to us. Now, in addition to Twitter, we're also on Facebook. You can see the address there in front of you. There's about 900 folks that join together on Facebook to talk about the market forecast indicator, these market outlook videos in general, and just other things that are going on in the stock market. So we'd invite you to join us there as well. All right, let's go ahead and get into our analysis for the day. You can see that I've got the S&P 500 pulled up in front of us here. And we were down 1.27% on the close, as I mentioned in the intro, and that was also at the low of the day. Take a look at that candle right there. That's a bearish engulfing candle. And when you have this dark filled-in color like we do right there, and there's no wick on the bottom or no shadow on the bottom of that candle, however you want to describe that, that basically means you closed on the lows. It was similar to this candle over here. Obviously, today's wasn't as violent. This was a really ugly one, down multiple percentage points, but it's not a good sign when you see that. Now, sometimes that does allow us to kind of flush out the weak hands. And we did see that this last time. We saw that the stock market did go down dramatically that next day in the morning, but by the end of the day, that was kind of the bottom of that particular move that we were making right there. What makes this a little different is that we're at the top of the range at this particular level as opposed to at the bottom of the range like we were back here. So if we are about to start a new swing lower in this current move, it's probably a little unlikely to expect that it would be stopped just tomorrow. So we're going to keep our eye on that developing story. We don't want to make too much of it because, of course, the posture from an intermediate term perspective does remain bullish, and that's why the background color of my chart is green. So for those of you that are looking out a couple of months in length to kind of establish your posture, you're still good to go. For those of you that are a little bit more nimble, you want to be more potentially day trading or swing trading from week to week, then this is a little bit more of a sign that you need to pay attention to when we have that bearish engulfing and closing at the lows of the day. We also saw that that near-term line there in blue on the market forecast did dip lower out of that upper reversal zone, so not necessarily a great sign from a swing trading perspective either if you want to be bullish in this market. So we'll see where this market does take us, but it's been a really nice run off of the bottom. You know, to lose 10% of the market in that quick of time and then to recover 2/3 of it as quickly as we did is pretty unheard of. And so with today's pullback, you kind of take it in stride if you're a longer term investor in the market. Let's go ahead and take a look at our next chart setup. Now in these ones, we've got kind of a 4-grid that we're looking at right here. With this 4-grid, we're looking at the S&P 500 in the upper left. We've got the Dow Jones in the upper right. We've got the NASDAQ in the lower left, and we've got the Russell 2000 in the lower right. What we can see here is that all 4 color of these chart backgrounds are green, and that tells us that from an intermediate term perspective, the postures on all 4 of those indices do remain bullish. If we were to take it a step further to see if we can kind of distinguish some things between these indices, one thing that I would point out is that if you look at the NASDAQ, that's a chart in the lower left here, notice that the tail of my moving average, and this is a 30-day moving average on this particular setup, the tail of it is green. Now what that tells me is that price is above a rising 30-day moving average. If we look at these other indices, we've got red tail, we've got a red tail, and we've got a red tail. And what that tells me on those cases is that price is currently below a falling 30-day moving average. So while the postures, according to a market forecast indicator, which is just one of hundreds of technical indicators out there, remains bullish, we do have some minor bearish elements that we need to consider as well, except for with that NASDAQ right there, as I mentioned, that's green tail tells us that despite today's pullback, which was pretty violent, remember the NASDAQ was down 1.23% today, so that was nearly as bad as the S&P 500, but it had recovered a lot more on the way up, so when it doesn't give back as much on the pullbacks like it did not today, then it's got a little bit more breathing room before you start seeing some of the greater chart breakdown. So right now, maybe if you're looking at bullish trades on a day like today, the NASDAQ and the tech-oriented focus of what you're doing could make some sense there. Let's go ahead and take a look at our next chart setup. And this is going to be our 3 green arrows 4-grid. And what you can see here is that one of the 4 charts that we're looking at, and these are the same 4 U.S. indices, 3-month daily candle charts in both these cases as well. But in the lower left, again, that NASDAQ stands out. In this case, the NASDAQ is telling us with the green background color that we have 3 green arrows. You can count them out right here. There's green arrow number 1 as price went above that rising 30-day moving average. Green arrow number 2, MACD crosses that 0 line, and green arrow number 3 down below here where we have the stochastics emerging from that lower reversal zone above 25. Remember the stochastic reading for upper reversal zone and lower reversal zone is 25 and 75. It's a little bit different than the market forecast, which is at 80 and 20. So point being, NASDAQ from 2 different perspectives does look like it continues to be the strongest index here in the United States. If we take a look at our next chart setup here, this is going to be, oh, hang on, that was the same one. There we go. This is our longer term view. And in the case of all 4 of our market indices here, this is a 3-year weekly candle chart that we're looking at with all 4 of these charts. And what the green background tells us right now is that the last time we had a crossover of the moving averages, and the moving averages we're using on these charts are a 10-week moving average and a 40-week moving average. The last time we had a crossover of those moving averages, it was a bullish crossover. And that's what we've seen back here and back here and back here and back here. And that was, in all 4 of the cases, more than a year ago. So this is not something that changes regularly. We review it regularly in these videos, but you shouldn't anticipate changes regularly. We're merely just pointing out where we kind of stand with things. And as I've kind of been mentioning in recent weeks, if we are to get a bearish cross anytime soon in these 4 indices, my expectation would be that it's the Russell 2000 that is most at risk for seeing a negative crossover, just because we have started to see that orange line that represents the 10-period moving average starting to roll over and get closer and closer, pinch towards that black line, which is the 40-period moving average right there. Whereas if you look at the other indices, we're actually seeing that reversal back higher with that orange line. So those are good bullish signs there. The only one that's holding out from that perspective is the Russell 2000 small cap universe. All right, let's take a look now at some sector 12 grids. And as a reminder on these 12 grids, I do have to kill that camera feed so that way you guys can see all 12 charts on my screen here. Now, as we're looking at this first set of 12 grids, the S&P 500 is the chart in the upper left, and you can see that has that bullish intermediate posture that I mentioned before according to the market forecast indicator, and that's why the background color is green. But then the 11 charts that kind of are following the S&P 500 are the 11 different sectors that make up the S&P 500, and they kind of have a variety of postures. In the case of telecom, staples, and real estate, those are all bearish postures right now using that intermediate term line on the market forecast. That shouldn't be all that surprising because those areas are more interest rate sensitive. Maybe one surprising element of that is that utilities is not joining them. Utilities has been a little bit stronger there, and a lot of times you will find utilities will travel kind of in the same general direction as real estate investment trusts because they are both interest rate sensitive. But you will notice that the utilities have kind of maintained levels above their most recent bounce here in early February a lot better than real estate has. Real estate, unfortunately, has gone right up to that 30-day moving average, kissed it, and bounced down. That's not a good sign. That's what we saw back here. In fact, let me kind of right-click and maximize this so it's a little bit easier for you guys to see. I know some of you watch this on your cell phone. And so as we're looking at XLRE right here, this is your real estate sector ETF. Notice that we kissed the moving average here, bounced off of it. We nearly kissed the moving average here, bounced off and away from those levels. We come over here, kiss that moving average, bounced off of it. Well, we've got that nice reversal off of that bullish cluster signal, but the problem is we went right up to that moving average again, and then it looked kind of decent here for a couple of days here in the last week, but just like that, they yank it right away from you. So here we are with XLRE down 2% today, an above average down day here. So that's not a great sign if you're interested in that sector to the upside. The other sectors that we're looking at have green charts telling us that we do have bullish conditions on the others, but there's just kind of a variety of chart patterns out there. You'll notice that, for instance, energy has that red tail of the moving average. So does your materials. So does industrials. You also have that as of today on the discretionary and healthcare as well as utilities. So the two that I guess are the most robust charts from this perspective that I'm kind of analyzing right now is your information technology, XLK. We've got a green background chart and a green tip of that moving average. And same thing with financials over here, green background chart, green tip of that moving average. Those are your two kind of stalwarts in the current marketplace, and that does match up fairly well, at least from the technology side of the equation, with what we saw from a broad index perspective earlier in our analysis when we identified that the NASDAQ seems to be the one that's the most robust. A lot of those technology names are the heavy hitters within the NASDAQ exchange. Now that I'm on the topic of sectors, I do want to kind of take a second to show you one thing. Some of you follow me during the day on Twitter, others do not, so I do want to point this out. Oh, first of all, I mentioned in the intro that I was doing a lot of tweeting about Warren Buffett's letter this weekend. Most of you caught that already. If you did not, what I did is I created a moment of it. Now, for those of you that aren't familiar with moments, I'm not overly familiar with it either. You can see here I've only made 2 moments under this account. So this is not something I do regularly, but I figured it would make sense in this particular case. Because basically what I did is I went to Berkshire Hathaway's website on Saturday morning. I read their annual report where you guys can all access that for free, including several prior years to this year's. But of course, it's widely anticipated coming from Warren Buffett, who is largely regarded as the world's greatest investor. I'm certainly a big fan, as most of you know. I've gone back to the Berkshire Hathaway meeting for the last 13 years back in Omaha, so I'm somebody who has followed his footprints into the marketplace quite closely. So I like to read those annual letters. And so I do get a lot of folks that are asking me, what are my opinion on Warren Buffett, Berkshire Hathaway, what is he saying here, there, or likewise. And so what I tried to do is I tried to go through, read that letter, pick out anything that caught my eye as being interesting, that was maybe a teachable moment, and then put it on a tweet. And so then once I was done with all of that, I kind of put all of those various tweets together in what Twitter calls one moment, which is basically a way to string together a whole bunch of tweets. And so if you go to my Twitter feed here on the internet. I don't know how this works on a phone exactly on an app, but I know for sure if you go to the desktop version of Twitter, you can look at a user's moments by clicking on their moments over here like I've done. And then if you click on highlights from Warren Buffett's letter, you can kind of see some of the things that I've been talking about. I tried to highlight some of the areas, and then my commentary that would go with those highlights would be right in there. And I'm just scrolling down right now, but this is several different tweets. Here's one tweet, here's another tweet, here's another tweet, and so on and so forth. So if you're interested in some of my thoughts on what I thought was interesting in this year's Berkshire Hathaway Annual Shareholders Report, feel free to check that out there on Twitter. But the other reason I wanted to bring you over here is, let me come back over here to my profile, and I posted something today on Twitter that I wanted some of you to be aware of. Here it is. As a reminder to those of you who maintain personal watch lists on Thinkorswim, you'll want to swap out Priceline for BKNG on your consumer discretionary and S&P 500 watch lists due to today's name change and ticker symbol change. So I thought I would do that in the market Outlook video here tonight. Normally I would do this in my classes with my old employer, but since I no longer have those classes and we're in the process of starting some of those back up again with David and I's new company in the future, I'll use today's video on the market Outlook to use as that example, because I know there are some people that are new to the Thinkorswim platform and are not quite as familiar with all the functionality quite yet. So one thing I should mention as well, just kind of randomly, this caught my attention right now. If you come back up here to the moments, just by pure coincidence, the other moment that I've created was on December 29th, 2017, when I gave you guys all the shared links for the various sector watch lists for your personal watch list on Thinkorswim. So this kind of ties into that discussion as well. So feel free to check out both of those moments from me if you'd like. But let me come over here to the Paper Money platform. And what I was referring to there is if you keep your own personal watch list. So let me come into my personal watch list. You can see I have a ton of them on here. And one of them is the S&P 500 discretionary sector. So this is something that I've manually built. Again, if you want to do it on your own, go check my moment there on Twitter where I've got those shared links if you want. But what I'm going to do now that I'm looking at all the stocks that make up the discretionary sector of the S&P 500 is I'm going to click on the symbol column right here to sort it from A to Z to make it easy for me to find whatever symbol I want to swap out. So as I do that, you can see that as I start scrolling down, I'm looking for Priceline, and there it is. Priceline Group says name change as of today. And so we're going to get rid of it because it's not trading anymore. So what I will do in this case, sometimes you have to actually swap out the ticker symbols entirely, like delete them out and replace it with a new company that's entering into the S&P 500. But this is kind of a unique situation where Priceline's not actually leaving the S&P 500. They're staying in there. They're just simply changing their name and their ticker symbol to Booking.com. So what we're going to do here is we're just going to click within this box that says Priceline. So I've done that right there. You can see my cursor is now flashing. I'm now going to hit the backspace button on my keyboard, and I'm going to type in BKNG, which is their new ticker symbol. Now, when I hit enter, remember, it's probably going to resort that, and that it's going to go up into the B's to sort it alphabetically. So I'm going to do that right now. I'm going to hit enter. So now it's gone. I'm going to scroll back up just to make sure it worked, and indeed it did. BKNG is now part of this. Booking Holdings right up here, and you can see that it was down 0.03% here today. Okay, so wanted to get that out of the way because I know a lot of you maintain those. And the same thing would be said if you have your own personal S&P 500 watch list as well. So if I click here, I go to personal, I'm going to go to the S&P 500 all stocks. Now, some of you are going to immediately think in your head, well, Brandon, why don't you just go to the public version of the S&P 500? The reason is because Thinkorswim doesn't update these lists regularly, and there are usually dozens of changes in the S&P 500 every year, and so I try to stay on top of that with the freshest data whenever possible. And there are times when Thinkorswim doesn't get around to updating their public watch lists for a couple of months after the changes are made. So for those of you that want to stay really on top, I would encourage you to maintain your own personal S&P 500 rather than waiting around for Thinkorswim to update their public one. So I'm going to do that right here now as well. S&P 500 all stocks. So now this is blending all 11 sectors of the S&P 500. I've still got this column sorted for alphabet, and I'm now going to scroll down to the P's to look for Priceline. And so where are we at? There we are. So I did find it. There's your Priceline right there. Same thing. Click inside of that area where the ticker symbol is. Hit the backspace button. Type in the new ticker symbol BKNG. Hit enter. And just to verify that it worked, I'm going to go back up to the B's just to verify with my own eyes that it's working properly, and indeed there it is. Booking Holdings is in there. Again, a small mover here earlier today, although I did hear that they are going to be releasing their earnings, and so I don't know if that was after hours here and if they've been released or not yet. Does look like maybe they did have, actually these are just some of the 8K, so I'm not sure if those earnings are out quite yet on Booking.com. Actually, hang on, that's still Priceline. Let me try BKNG while I'm at it here. There we go. Yep. So you can see, and this is, again, a peculiar situation there. Just because this company's ticker symbol hasn't been around long, it's going to show like there's hardly any news right here. But normally you're not going to run into this. This is very unique to have a company change its name and ticker symbol on the day that they're actually reporting their earnings. But right now we do see that Booking.com, its bid price is $2,020, and it closed today at about $1,900. So they're up about $200 per share in the after hours session here as of right now. Okay, back on track with some more analysis. Let's go over here to our next 12 grid, which is going to be our foreign markets 12 grid. And here, same thing. We're looking for either bullish or bearish postures using that intermediate term line on the market forecast indicator. And here it's a bit more of a mixed bag. And this is where I kind of wanted to get into what I mentioned in the intro, which is there was one country that really took it on the chin today. And I'm kind of pointing at it up here. Notice China. China was down 4.25% here today. If I right-click on that particular chart and go to maximize sell, you can see after a pretty decent rally up towards that moving average, it kissed that moving average and now rejected it wholeheartedly here today to the tune of over 4%. That is an aggressive down day for such a large market like China. You'll also notice that it was such an aggressive day that that moving average went from green to red. We hardly ever see that. Much more normal is what you see like over here. You went red moving average, yellow, green, right? Or you go the opposite way. You go green, yellow, red. Very rarely do you go from one extreme to another, green to red. That shows you how aggressive of a day today was. And again, 4% is a monstrous day for any market. You guys will recall that we had one of those in the S&P 500 here a couple weeks back, and it felt like the world was going to end, or at least that's the impression you got if you were listening to the financial media. So China was down pretty big today. And, you know, one of the reasons, in my opinion, I could be completely wrong on this, but it was actually, I'll take you back to Twitter here one more time. Let me go to my tweets. And, you know, one of the things I've been kind of talking about here today is it just so happened, just purely randomly, that one of the books I pulled off my bookshelf here over the last week was this book called If It's Raining in Brazil, Buy Starbucks, and that's by Peter Navarro. Peter Navarro, for those of you that aren't familiar with him, he's been around quite a long time. This book actually was written in 2001 or 2002, so the book itself is quite old. But Peter Navarro apparently is cozy with the Trump White House, and he's going to be an America First trade expert. Now, not only that, but the times, I'll be honest, I'm not overly familiar with Peter Navarro, but the times that I've seen him interviewed on business television, a lot of the times I get that sense that he's got an axe to grind against China, and maybe rightfully so, right? I'm not here you know, pointing fingers or anything like that. I'm just, you know, general observations. But it does seem like a lot of times when I hear him talking on TV, he's talking about how China and the United States have kind of an unfair trade situation where China's getting the best of the United States. And obviously that was a big platform that Trump was running on as well a couple of years ago when he was running for president. So I don't know for sure if that's the reason that China was down significantly today, but I don't think that it helped. Because if indeed Peter Navarro is going to start helping President Trump with policy decisions regarding trade, they may very well have their sights set with China. And so that's possibly why you've got that big move down in China. So we are going to practice our trade application example on that here in just a moment. But before we do, let's go ahead and quickly take a look at our final 12 grid, which is the intermarket analysis 12 grid. And you'll see here that we've got kind of a mixed bag. with these, and these are going to be things that are not necessarily stock oriented. You know, the one thing I've been keeping my eye on lately is interest rates, and after 3 straight down days on interest rates, we did have a big spike higher again here today. As mentioned in the intro, there's a little bit more expectation today than there was just yesterday that we're going to end up with either 3 or 4 interest rate hikes here today. So, you know, that is going to start pressuring some of those yields a little bit higher there as well. And of course, volatility is another area that's been in the news here recently. Volatility spiked pretty dramatically today, according to the VIX. It was up 17% here today to get us right back to that moving average there. Of course, that's been a roller coaster of a ride on the VIX here in recent weeks. All right, so that does then bring us to our trade application example for the day. And as mentioned before, we're going to use China as our example here. Markets got hit a little bit today. We have an example of a chart right here that does have a bearish posture according to the market forecast intermediate term line. And we also have that red tip of the moving average signaling that this rejected price action to the downside is now below a falling moving average, just slightly downtrending moving average, but it is falling nonetheless. And so we're going to try to take advantage of that by selling a bear call spread. And so what we're going to do in order to do that is come back over here to the trade tab. We're going to type in FXI as our ticker symbol up at the top of our paper money platform. We're going to come down here. In this case, I like to stick with the monthly contracts whenever I can. The March ones only have 17 days until expiration. And so unfortunately, there might not be enough juice in those contracts for what I prefer. So I'm going to go out to the April contracts here that have 52 days until expiration. I'm going to look for a delta that's close to 30. In this case, we have a 28 delta right here, and that is going to be your 51 strike here in April. So I'm going to right click on that particular call price. Now remember, we're selling a bear call spread. So we're selling we're selling one call option and we're buying another, and the net effect is a bearish trade. And so I'm going to go to sell a vertical. And what we're doing here is we're selling the 51 call, we're buying the 52 call. You know, when I looked at this right before the market closed, that credit was 24 cents. This has changed after hours here. Sometimes the options prices can kind of readjust right after the market closes. So I am going to change that back to 24, just FYI. If we don't get filled on this, I'm fine with that. But the reason I want it at 24 cents is because that's right above our 30% return on risk. If you want to calculate that number yourself, remember one easy way to do it, click on confirm and send, and then get your calculator out. And the max profit, in this case, on one contract, we can make $24. Our worst case scenario, if the thing totally went against us, would be a $76 loss. So 24 divided by 76 is a 31.5% return on risk. And so that is where I do want to get filled if we're going to get filled on this. So what that's going to likely require is a slight uptick in prices tomorrow in order to get this bearish trade filled. And then after that, we'd kind of be cheerleaders to the downside on this particular trade. Because basically what we're saying here is 51 is our line in the sand. This is a stock that's trading, or an ETF that's trading at 48 right now approximately. So if we look at the chart, we would have to say, okay, 51 is right up here. We believe in the next 50 days or whatever it is until the April expirations that we believe that this particular ETF will stay below 51. So we'll see if we can get filled on that rare bearish trade here in the most recent bullish bounce that we've had. But we have enough chart evidence to suggest that things aren't quite as rosy as maybe some of the bulls in China would want with today's news about Peter Navarro. So I'm going to click on confirm and send, and we'll ship that off and see if we get filled on that trade. So with that, thank you for joining me here tonight. Definitely appreciate your guys' viewership. Remember to like and retweet on Twitter if you get value out of these videos, if you're getting educated from David and I in our various takes on the market on a day-to-day basis, as well as giving us a thumbs up on YouTube if you like these videos. All right, that's it. I'll wish you all the best on your trades and your investments. David will be back with you tomorrow, and then I'll be back with you on Thursday. Have a great day, everybody. Take care. Bye-bye.